What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to break down what just came out with the CPI report, what's happening with it tomorrow as PPI is also coming out, and what the news, data, and technicals are telling us about the markets and Tesla for tomorrow. Now, before I break anything down about this, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks, and any could be a free Tesla share. It's a limited time offer. The offer ends in just 2 weeks. Check it out before they run out. With that out of the way, let's get on with the video. So when it comes to the overall market, guys, we did actually see the market end up pushing up thanks to CPI. And overall, it was some very interesting and tricky price action for many traders out there. The market started off actually gapping up very hard. And we actually saw the tech sector, outperform the S&P 500. So now the tech stocks did hold up a lot better, but overall, we all had this like really nice gap up to the upside. Market pushed up pretty hard in the very beginning. Then we got hit with some major resistance. Market came tumbling down, and this was almost like a fake out because many people were probably thinking the market was going to crash and fill the gap down here. Instead, before the market filled the gap, we got a very big bounce and a counter trend rally during the last hour, and we did see SPY close up 1.65%. We saw the QQQ outperform SPY. It was up like almost 2% from when I last looked at it. It was up over 2%. Sorry about that. And then Tesla, of all things, was actually up by a lot more. So this actually stopped at very strong resistance line right over here on the QQQ. And this is going to be very significant for tomorrow based off what happens with PPI. Now, my screen, when I do switch between different stocks, is lagging as of right now because I don't have any Wi-Fi or any power, so to speak. I'm actually using my hotspot to record this video to connect to the Wi-Fi. I don't have any power because there's a big storm outside where I am, and the winds are just absolutely insane. And the power did go out, but it's okay. I'm doing completely fine. And as of right now, no one is hurt. So I want the best for everyone, but I'm still going to make this work despite that. Everything's going to be the same, except I can't really switch between different time frames, but that doesn't really matter too much once I show you what's actually going on in the markets. So a couple of days ago, on Saturday, I released a video and I said Tesla may squeeze next week. I released a video about why I believe that. I also mentioned it's going to be based off market maker manipulation and different factors. And as of right now, that is what is happening to Tesla. Tesla was in the 160s when I recorded the video. Now Tesla's in the 180s. So we are seeing a bit of a short squeeze. And on top of that, we're starting to see more algos starting to buy more and more into this market. But the real question is, will this continue and what's going to happen tomorrow? To start off, we have to talk about today first. Today we had the CPI report that came out, and this report, it wasn't necessarily great, but it wasn't horrible either. I mentioned to you all that Joe Biden, the president Joe Biden, he was very excited and confident that we would get a good CPI report. And if anything, I wouldn't necessarily say it was that great, like I said, but it wasn't horrible, right? I say that because, look, we are still showing some signs that CPI is starting to cool off. There are some signs as of right now. Could this change in June? The answer is yes. This could change later on as summer comes because during the summertime, we do have a tendency of seeing inflation tick up again. But so far, it's not happening. So far, CPI is aligned with expectations, and it's actually not increasing as fast as it was from before based off the data. So that's the good news about it. The good news is there is some evidence, some possible evidence that CPI is slowing down a bit. We're not seeing prices exploding as much as they were before. So that is the good part. The bad news, and this is why I said this report wasn't actually great at the same time, is we were aligned with expectations, which are still very high. Overall, we're up 6% from a year ago in terms of CPI. That is still very far from the Fed's target, so the Fed still has lots of work to do. The Fed is still technically incentivized to actually raise rates even more again. Are they going to give us 50 basis points? They're actually less incentivized to do this because of the pain that banks are going through with the collapses. The rate hikes caused a lot of the mortgage backed securities, the bonds, and a lot of their treasuries to lose so much value. And in doing so, a lot of the banks had to suffer because of it, especially when they were over leveraged when it comes to their exposure to more riskier assets. So now we're starting to see the FDIC using additional funds that they actually happen to have, selling more of their assets to come up with the funds to help insure and support a lot of the depositors that are going through lots of pain. As of right now, similar to what Janet Yellen initially said, was taxpayers are not going to be paying the burden for this. As of right now, it's looking that way, but this could completely change depending on what happens to different banks. So, yes, the FDIC is going to be using their assets to help basically bail out. It's not like a typical bailout, but like help out with the banking situation. And this is improving, at least specifically for Silicon Valley Bank and also for Signature Bank. But the problem is we're not out of the water yet because so many other banks are being impacted. And this is just showing us the very beginning of this. Another thing that's worth noting is when banks are misusing their money and they're not hedging properly and they're really struggling right now, if all of them just get bailed out, this incentivizes them to just keep playing around, right? So they're going to need tighter regulations. They're going to need a lot more eyes looking over what they can and cannot do. And many regulators are now talking about how they need to limit how much money banks could lend out. So I just want to note all of this. There's so many eyes and so much light shining on the policy changes that came in, I believe, 2018 and also 2020. I think March of 2020, they gave banks a lot more freedom to help stimulate the economy. But this is actually now working against them. So I wanted to make all of this very clear. The Fed is now in a position where they're most likely going to raise rates again. And I believe they should because CPI is still hot. They really should raise rates again. They shouldn't necessarily pause, in my opinion, even though Goldman Sachs is saying that. So I'm not seeing 50 basis points being as likely as before. I think there's a lot of panic right now. Sentiment is shifting, and people are just worried that we're going to see something very similar to 2008, where a lot of banks were collapsing and the government may have to step in or something else like that. Now, the problem is we saw the second and third largest, bank collapses since 2008. This is massive for US history and this is huge. So this is why the Fed might not give us 50 basis points. I'm not as inclined to thinking that, but I do think 25 basis points is very likely. I'm not really seeing a pause as of right now. It also depends on what Powell says, but I just wanted to make this all very clear for everyone. This is what CPI is confirming for us, and this is why CPI was so important. Now, there are other headlines saying that CPI may have cooled in February, but only slightly. I believe once again the Fed still has a lot of work to do. Is 50 basis points possible? Yes. It's a little bit less likely than before because of what's happening to the banks, but it is still possible. 25 basis points is more likely too. But overall, the Fed still has more tightening to do. Now, CPI is very important, but what else is going to be very important is going to be PPI. CPI overall was 6%, aligning with expectations. Core was at about 5.5%, once again aligning with expectations. Very close to what I predicted yesterday. I was just a little bit more, I thought it would be a little bit hotter than how hot it actually was for just CPI. Now, for PPI, that's coming out tomorrow. This is like CPI from the producer side, the wholesale side. This has a tendency of being very similar to CPI or a little bit hotter, right? So what I'm guessing is I think we're going to be seeing a PPI report that's very close to expectations, maybe a little bit hotter, just a tiny bit. My guess is so right here we have PPI. The consensus is 5.4%. We might see it around 5.5% or something like that, which is very close. But then the core PPI, I think it's going to be very close to expectations. Core is supposed to be about 5.2%. We're probably going to see something like that. So in the morning, expect very high levels of volatility. If PPI is higher than expected, the market could actually tank a bit. If PPI is, lower than expected, a lot lower, which I'm not really seeing considering that CPI was at expectations. But if that somehow happens, if the numbers are manipulated and they cause that, the market could actually rally even more in the very beginning of the day. So just remember this. Now, you also have to remember that the market makers, and as I mentioned in my previous videos, the market makers are most likely going to continue to play their games. Look at how max pain for today was 391. That is very close to where SPY closed at. For tomorrow, it's at about 392. And then for Friday, it's at 399 with a 1.91 put to call ratio. And there are actually over 3 million puts in total. So notice how this showed about 2 million puts out of the money. Now it's 2.5 million. So they're moving a lot of these puts out of the money and they're trying to get more calls in the money, which means the market makers are going to likely try to continue to pump the markets. I told you this many times, and we're starting to show many, many signs of that happening. This is also helping Tesla pump, but you have to be very cautious because of the fact that later on, max pain drops like crazy, and this could just be a giant bull trap that's forming. Now, for Tesla, inventory levels are starting to go up just a bit. They're not too high, so I'm not too worried about this. And overall, since they are still at these relatively low values compared to before, demand is still at a good place for Tesla. Let's just see this number actually drop. I want to see that drop for us to like remain a lot more comfortable, if anything. Now, when it comes to Tesla, I had like one major piece of news that came out. Tesla walked away from public funding for superchargers because of a payment system integration. Now, this is not necessarily like good or bad news or anything like that. This is kind of like in the middle. I know a lot of people are trying to like twist this and they're saying that Tesla's walking away from millions of dollars in public funding for superchargers in California due to certain requirements. However, there's also another side to it, and that's the fact that Tesla already received a lot of funding, and they have actually worked alongside the US government to help improve their stations and actually expand into different outlets. So, in my opinion, I don't really see this as that big of a deal. I think that this was running for about $6 million in funding for like 420 charge points. Nothing like too massive. They basically gave up like $6 million in subsidies. Like I said before, not really horrible news, just kind of minor. The media is kind of exaggerating about this, but it is worth noting things like this do happen. Now, Tesla had relatively low volume. You have to remember, we're pumping on low volume, which means that these pumps tend to not be as sustainable. All right. So it's not pumping solely based off like insanely high buying pressure. This is not mainly like retail throwing their hands up and just buying like crazy and YOLOing in. What's mainly pushing Tesla up right now, or at least to some large extent, is going to be short covering. And I mentioned earlier, short squeeze, short squeeze. Tesla could see a short squeeze. The short volume is dropping. Yes, there is long volume that is increasing, so there is more buying pressure than before, but that's not the main thing. It's also the shorts starting to cover a bit. Overall, the shorting for Tesla is both going up and down. It did go down a bit over the last like couple of days. We did see millions of Tesla shares shorted. It's actually going down, meaning some shorts did cover. But at these higher levels, more shorts are starting to pile in at the same time. So what Wall Street and many of the shorts are doing is many of them are getting squeezed. So they are starting to cover at these like values. They're pushing Tesla up. And I think that what their plan is, as the market makers push the market up, they're going to just keep letting that happen. They're going to let Tesla go up and up and up, and then they're going to have very, very good positions to open and re-enter their shorts above. That's their plan. And we're already starting to see the short interest go up again. It increased by another 5 point. That's like almost 6 million shares. 6 million shares were shorted again. So that's what their plan is. They're going to let Tesla push up for maybe the remainder of the week, maybe the whole market, and then the shorts, the bears are going to be piling in again, most likely. Tesla tends to be green about 48%, maybe 49% of the time on Wednesdays. Not the best of days typically, but it's still okay. And once again, we tend to be very slow in the beginning and we tend to see more volume, more buying pressure as the third and fourth hours come of the day. Just like how Tesla took a little bit of time to really start pushing today. And relative to the market, we're starting to see Tesla outperform. And that's because of the fact that it's not just Tesla, but the tech sector in general is actually outperforming SPY. Relative to the QQQ, Tesla's just barely outperforming. But right now, I think that the way shorting and the way the shorts pile in is they're moving in cycles. And right now, they're not as heavily shorting, trying to bring down tech as they are for like the S&P 500, at least during this time frame. So we are seeing tech outperform. This could be part of a giant trap to get retail to start buying in again so that they could smack the market down later. That's very possible. Now, to come to that conclusion, it depends on lots of data, but now let's break down the charts. Once again, I want to note to everyone that I'm not going to be switching between different time frames. I don't really have Wi-Fi right now to do that, and if I do switch, my entire screen is going to lag too much. I could switch between different tickers though. There's a small lag, completely fine. This should load. What I'm essentially seeing is look at the trend. Okay, I told you all that the market makers would have benefited if the market pumped after CPI, and they might try to pump the market for the end of the week. That could be their intention because we do have quadruple witching, lots of options expirations for SPY, also for Tesla. Now, is the market going to just pump immediately? It is a possibility. But my guess is if you look at the trend yesterday, the market sold off pretty hard at the end of the day. SPY went from 389 all the way down to 385 ish. That's like a $4 drop within an hour. Huge drop. And then all of a sudden, we got a big gap up and the market just rallied. This was kind of like a trap in a way. And then now the market's just, it basically cooled off as the hours went on. This was kind of a trap for lots of bears. Then we get a big push at the end of the day. Now, this is making me think that the market might actually now gap down and cool off a little bit more. And we might try to see SPY fill this gap tomorrow. That's my guess. Now, I also want to note I can't predict the future as accurately because it depends on PPI. I think PPI is going to be very important. It will affect the market. It might be a little bit hot, maybe a tiny bit close to expectations, like super close to them, and just a tiny bit hot. I'm thinking that we might see the market pull back a little bit, find a bottom, and then bounce. I think that's the most likely possibility. But but if PPI is just fine, the market might just continue to rally to destroy shorts. That's also another possibility. But either way, I think the most likely thing is the market coming down and then bouncing and then continuing from there. For SPY, we have resistance. There's some resistance around this 391 zone, not as significant as 393. Very strong resistance right there. If we could break 393, which is where this downtrend resistance happens to be, if we could break this, I expect SPY to fly all the way up to this 395 to 396 zone. Break that, then 400 to 401 is possible. That's the more like super bullish case. I don't think it's going to go that high that quickly. I think by the end of the week, it is a real possibility you have to consider. If you're bearish on SPY, you're going to be watching this thing break below. It has to break below 387. This previous resistance, 387.69, which is now going to become support. Break below that, we're going to likely fill this gap in the 385, and then we have to bounce around 385. If we fail to bounce there, I mean, there is 383. I'm not counting on us to bounce as hard as like 385 because support is not as strong there. So that's the next level to watch, 383. If that fails, then there's 380 flat, and then we could end up making new lows if it goes all the way down there. So that's the more bearish case. What do I think is going to happen? As I mentioned before, I'm anticipating the market might be very slow in the beginning, maybe even gap down off PPI, come all the way down to fill this gap very early. I think this is going to happen in the morning within the first couple of hours. That's my guess. And then we should see a bounce off this 385 level, and the market might start to rally again, especially at the end of the day, uh, as we do have max pain around 392 and also a 1.24 put to call ratio. So the market might rally to end the day, once again squeezing some shorts and still actually helping the market makers out. For Apple, very similar trend. Apple also happens to have a gap like way down here around the 146 zone. That's pretty far away, so I don't know if Apple's going to drop that hard. It might come down to retest at least 150 or come very close to gap support, which is around like the 147. Then it might try to bounce off that and just like keep going. That's also a real possibility. Now, if you're bearish on Apple, watch 150, 147, 144.7, which is the 0.382 retracement. And that's where this thing could even bounce if we drop that low. If you're bullish on Apple, make sure you watch resistance at 153.4. This zone right here has some resistance. 154.5, 156.3, then 157.5. They're all some resistance levels. You've seen Apple like reject off of them. The stronger resistance is going to be around this 156 to 157 zone. That's where we have a bit of a supply zone. Now for The triple Q is quite strong. It's very strong compared to the market. We actually closed right at resistance. So I would think that we might reject off of it in the morning, maybe come down a little bit, then try to bounce and then try to fight through this. And we might just break it near the end of the day, thanks to quadruple witching. Maybe by like next week, not next week, tomorrow, and like by like later into like Thursday and Friday, we might try to break this. Maybe later into the day, maybe by Friday. This could be a move to squeeze lots of shorts out. Overall, it's looking relatively strong though. So you have to remember that. So there is also the possibility it doesn't even gap down. It just like wants to keep going. So be prepared for that just in case. If you're bearish, watch 293, which is where we have support. Then we have the gap fill around 291. Then we have support around this 288 to 290 zone. If you're bullish, if we break this 298 resistance, we could fly all the way up to about this 300 to 301 resistance. And if we break that, then the higher, like mid 304 to 305 levels are very possible. But until then, my best guess is okay. It's a guess based off previous data. It's a logical guess if you want to use that claim. Based on previous data and based off what happened today, my number one prediction would be maybe a gap down tomorrow. We come down, come close to filling the gap. We might even fill the gap tomorrow, then get a nice bounce, and we might try to break above this later on. Finally, for the dollar, it's just trading flat, which means the market could just do its own thing. The dollar is not really dictating us too much. It's just chopping back and forth as algorithms are taking over. Not too much is happening. With the VIX, we got a very clean rejection today. We rejected off this 30 level. Then we came down, and this thing just continued to downtrend as the day went on. Overall, it's down 10%, which actually hurt a lot of options. My guess is the VIX might into open, since the VIX came down pretty hard, it might try to bounce and maybe gap up a bit. Maybe retest this like 24 level, maybe retest 24 to 25.4. Then it might fail again and start to downtrend, retest 22.64, fail there, and slowly downtrend and approach that like $20 level. That's very, very possible for the VIX. If that happens, once again, the market can make the move I was just saying. And finally, let's talk about Tesla just to end this video. What do I think Tesla's going to do? Well, look at the gap up here. There's a gap all the way up to about 187. Now, if you're super bullish for Tesla, you're going to be looking for it to fill this gap. If it does fill the gap, I'll be looking for it to maybe slow down afterwards. The gap is going to take it to 187. This 187 to 190 level might have resistance. We might see Tesla reject very close to 190, maybe slow down afterwards. Could still close green, but that would be the more bullish case, getting all the way up to almost 190 and maybe slowing down around there. If you're bearish on Tesla, if you think Tesla's going to fail, make sure you watch for, well, the very important level is going to be 180. This was acting as resistance for Tesla. If 180 fails, the next major support is going to be 177, around the 177 zone, 177.25. It has to hold that. If that fails, then there's a gap all the way down to about 174. And if that doesn't hold, then we're going to likely retest the previous resistance, which is now going to become support around the very low 170s. So there's quite a bit of support for Tesla. And overall, the trend is relatively strong. If you actually look at our MACD, looking pretty strong on Tesla. Very proud of it to see it moving like this. Very strong trend. My number one prediction is I think the market might gap down tomorrow, and it might be like a fake drop in the morning. The market's very good at tricking people. It's very tricky. There is a chance Tesla might retest gap support. I don't know if we're going to fill the gap or not. Even if we do come to this zone, I would be looking for it to come down, then maybe bounce, get a really nice bounce, and then just keep going for this gap. And it's eventually going to most likely do that. Now, if the opposite happens and Tesla ends up pushing up into the morning because PPI is a good number, we could just fill this gap immediately, then slow it down afterwards. It all depends on PPI, okay? If PPI is cold, if PPI is just lower than expected and the market rallies off of it, Tesla could just fill the gap immediately, like super quickly, and then just almost make it to 190, maybe try to test it. If PPI is way too hot and the market crashes, hypothetically, if that happens, Tesla could also come down a bit, but I would still anticipate it's going to try to hold still because of the fact that It appears like we have a temporary bottom that was established based off the wick, based off the switch in the MACD and the switch in the RSI, and also based off the trend change and many different factors from the market makers and the options chain. Once again, I want to prepare everyone for the bullish and bearish possibilities. But like I said before, my number one prediction, my number one logical assessment is going to be we likely gap down tomorrow. Maybe Tesla opens around like 180 flat. We might come a little lower to about gap supports around this like 177. Maybe we fill the gap, something like that. We come a little bit down and then we get a really nice bounce. This drop could be like a fake out just to trap a lot of bears. People thinking the market's going to crash. Then the market makes a big reversal and then Tesla keeps going intraday later on, and then Tesla eventually fills this gap. That's my number one guess or logical assessment if you want to go that route. I do not know what PPI is going to bring, so I can't promise anything, but I just think it's very likely because of the fact that the market rallied at the end of the day and because of the fact that PPI does have a tendency of being a little bit hotter than CPI. All right, so thank you all so much for listening. Have an absolutely incredible rest of the day. And remember this gap right here on Tesla, it's going to be very important. Whether we fill the gap in the morning or not, whether it takes some time, be prepared for anything. And my number one guess, once again, is potentially a gap down, a bit of a slowdown into the morning, then a really nice bounce. And for the market to actually get an end of the day like push up or even rally, once again, squeezing shorts and faking them out in a very, very nice trap. That's my prediction. Thank you. Tesla to the moon because the long term future is still very, very bright. And peace out.